Good evening, friends. Welcome back to my channel, Infinite Trade. My name is Robin, and this video is one of the most awaited and requested video, which is how I read candlesticks. So I did upload a Hindi version of this a few days ago, and I've definitely received tremendous views on that. But then there was a request to make it in English also, and I already had a plan to make it in English. So today I could finally accommodate some time. So let's begin this video. Okay. So what do you learn from this, and what do I expect from you all? So let me just be clear on that. So the first thing is, whatever I'm going to explain here will definitely help you in understanding the candlestick psychology completely. And second thing is, uh, the explanation is based on an intraday strategy. Okay, so how do you understand the candlestick patterns on intraday? And I'm also going to make a video which is a part two. So that is basically will cover the positional kind of analysis. But for that, I had already told in the video that I need 200 views and 50 likes, so that then I can go ahead and actually record that. So going forward, whatever knowledge sharing that I'm going to do, all that I'm going to expect or from you is to give the maximum views and shares and likes, and also comment if it is being helpful to you or not, because these things will motivate me and help me make more videos and come up with more good content. So there were few. So this video is definitely going to be a long video. So I'm going to discuss a lot of other stuffs which is happening in the background, so that you also have a fair idea about it. So there are some people who texted me personally asking me to take some course, some paid course. So let me be very clear. Like other YouTubers, I don't really want to do that. Okay. So people who are saying that they are rich and successful traders, they also do that, but I don't really want to do that, because I don't even have time to take up a course and take that responsibility at this point of time. But what I have planned is, whatever I know, I'll definitely make a video on YouTube and share it with anyone and everyone, because I don't want to keep it hidden or keep it to myself and charge money for that. So I want to be a trader, and I'm definitely a trader. So I would rather make money out of trading, instead of taking money from you all. Okay, so please excuse me for not providing any paid course, and definitely don't encourage others also. So unnecessarily you're wasting money, learning things. Uh, so paying money to learn things are okay, but you should be getting benefit out of it. That's the point. So this candlestick video and the Fibonacci video which I had posted earlier, these two videos, if you watch it, understand it, and apply the concept, trust me, you don't need any other thing for intraday trading. Apart from this, I do post the daily analysis video, and mostly I've also taught you how to read the participant data. So apart from this, there is nothing required. So don't unnecessarily waste money in learning something, which is waste of money. And rather, if you want to spend some money and learn something, I would suggest you to, learn some option strategies, so that can be of a great help. You can rather read a book if you want, but don't spend money on YouTubers anymore. That's the advice from me. Okay, so now let's get into the uh, content. So how I read candlestick. So from today, you don't have to look for line charts anymore. No Heiken Ashi, Renko, no more confusions basically. So candlesticks will be explained in detail. If you practice this, I can challenge you. Most of the time, you will know that what will be the next candle. Okay, that's my guarantee. And there are some people who know that, and when I tell them that this is the candle that is going to be formed, and that happens. So even that will happen with you also, but that will come with practice. So from today, sorry. So whenever you learn something, you need to unlearn yourself. Okay, because that helps you to grasp the content clearly. Because if you know something, you'll always compare things, and that will create confusions unnecessarily. So what are you going to do is unlearn yourself and just stick to what I'm telling here. Okay, so from today, you will not think, or you will not talk about a hammer, inverted hammer, dragonfly doji, bullish engulfing, bearish engulfing, inside candle, outside candle, harami, and whatever. So forget all those things. Okay, trading is simple, trading is easy. You don't have to, you know, become a scientist or a doctor to trade. Okay, so from today, we'll have only two set of candles. So one is bullish or a bearish candle. So these are just examples, okay? So there may be some more examples, but just ignore it. This is just for the presentation I created this. So these are bullish or bearish candles, or we can say that decision candles. So what do you mean by decision candle? So this candle has already taken a decision. So this body says that there are bulls present in this particular candle. Okay, and similarly here it says there are bears present in this particular candle. So that's why we say that this is a decision candle. And these candles are indecision. Okay. So no decision taken. So anything which has small body and which has bigger wicks, maybe upside and downside both, or maybe on one particular side, regardless of it, we are just going to have two set of candles. One is decision candles and another is indecision candles. And trust me, you will not get this content anywhere on the YouTube apart from my channel. So please do share, like, and subscribe so that we get more and more views. Not that my channel should grow, that I definitely want to, but the right set of knowledge should reach people rather going here and there, looking at P&L statement of PR Sundar or Subhashish Pani, and running behind them to know what they are doing. Definitely they are doing well, but that comes with practice of certain things. So that's what I'm here to teach you. So basically my idea is to make trading more easier, so that you don't have to look at the option chain, look at support resistance, look at the telegram view, look at the Z business. You will eventually forget all these things, and you will only watch the chart and that what's happening on the chart. So that's how the trading would be, and it is going to be very simple. I'm going to break down it as easier as possible. So please. So there are two things that we are going to learn in this. One is candlesticks. Okay. So a lot of people might be thinking right now that if we are not going to discuss about hammer and inverted hammers, then what are we going to learn about candlesticks? You're going to learn something interesting. Okay. So we are going to focus on two things. One is candlesticks, and the second thing is opening range. Okay, so what is an opening range, or what is an open price? Okay, the opening price is the price at which a security first trades when an exchange opens for the day. Okay, so wherever market opens at 9:15, wherever Bank Nifty or Nifty opens, it could be a gap up, gap down, or a flat opening. That is called as the opening price. And whenever the market opens, that is very important, because after that the decision is being made, to which side the instrument is supposed to go. And opening price is not identical to the previous day's closing price. We all know that, and we agree to it, because if, for example, Bank Nifty closes at 43,300, tomorrow it doesn't opens at 43,300. So either it will open at 43,350 or 250, or maybe a more big gap up or a gap down. So that's how it is. And there are several day trading strategies based on the opening price of a market or security. And definitely there are a lot of strategies like that, because opening price matters a lot. Okay, so for example, if yesterday market closed and today if it opens gap up, that means there is some positive sentiment. There is some positive sentiment around the world, across the world, in the other markets, and that is one of the reason why we opened with a gap up. So all these things are taken into consideration, and you may know very well that a lot of people go for selling when it opens gap up, or when the market opens gap down. A lot of people go for buying. They take reverse trades, except or expecting that it will fill the gap. So those are some strategies, but we are going to discuss about the opening range breakout strategy. Okay, the first 5-minute candle of any stock or index is very important to determine that particular day's movement. Okay, this is what we are going to speak about. Many trade 5-minute candle breakout or breakdown, also known as ORB strategy. I'm sure whoever watching my video, they know it very well, but many fail trading this strategy. Why? Trust me, I think when I came into the market, I also told about this opening range breakout. Okay, I tried 5 minutes, I tried 15 minutes, I tried 30 minutes, and then eventually I even tried hourly candle. But trust me, I failed miserably because those days I was like you, running here and there about watching videos from a lot of YouTubers. There are a lot of YouTubers in the YouTube world. Definitely a lot of people are putting their hard efforts to give or share knowledge to the people without taking money, but eventually at some point of time they start pitching in some paid courses because they need money to trade. So but in our infinite trade channel you will not see that, and I don't even intend to do that. Okay. So from today I assure that everyone watching this video will be able to trade the breakouts, okay? Regardless of the instrument, it can be index or it can be stocks. But whatever I'm going to explain today is definitely going to change your trading style. Also, I'll explain the logic of each and every candle that is formed on the charts using one simple technique, that is follow through candle technique. So the basic funda to understand the entire video is this, okay? So this is where you need to focus, and this is where you need to focus. So to trade the first 5-minute candle, I already uploaded a video of Fibonacci trading. So that is also an excellent strategy, and me and a lot of my friends and colleagues, they still trade based on that, and there are people who are earning more than what I earn using that strategy. So definitely a beautiful strategy. I think people who haven't watched that video should also go and watch it. So let's move further. So what are we going to learn here? Okay. So the concept that we are going to cover using this candlestick technique is how to determine if buyers are in control or sellers. Breaking the myth of big bull or bear candle. Okay. So when I say breaking the myth of big bull or bear candle, so a lot of times, in the market, you might come up or you might see a big green candle, okay, a big Marubozu candle. So what people think is, oh, so finally, there is a decision which has been taken and there are bulls all over the place, and hence we see a very big candle. So like, if we put a 15-minute chart of what happened today, at the end, you will see a big green candle both in Nifty and Bank Nifty. So if the candle is big, regardless of color, if it's green or red, that doesn't mean that it's it is bullish or bearish. It is not necessary. So that is the reason why I'm saying that, breaking the myth of this. So how to read candlesticks? Definitely we are going to see that, and how to trade the ORB. So ORB we are going to trade in two ways. Okay. So one of the way is the Fibonacci trading, which I've already discussed and a video has been posted. And the second thing is what we are going to learn today. Okay. So I think now it's time to open the whiteboard and understand what's happening. Okay. So what we are going to learn here is, the first thing that you're going to do is So the first thing that you're going to do is mark the high and low of 9:15 a.m. and 9:20. So that means the first 5-minute candle. Okay. So if this is the candle, what you're going to do is mark the high and low of this candle. Okay. So we learned that opening price is very important. The market has opened, it has formed a candle, and we know that this particular candle is very important. And the second thing that we're going to do is try and understand which side the market is going to head. Okay, is it going to be bearish or is it going to be bullish? Is something which we are going to look at it. So here what you do is, so you got a high and a low. So this is your resistance, this is your support. So all that you do is you trade if it breaks the support, or you trade if it breaks the resistance. So basically a breakout or a breakdown. And but here's the challenge, and here is where the candlestick psychology comes into place. Okay, so imagine, so let's take up a scenario that where the candle has opened, regardless the closing price of previous day. Let's just forget that, and what we are going to learn is, let's understand if it breaks the support. Okay, a lot of time what happens is the market breaks the support. Okay, there's a red candle, so everyone is looking at the support. Everyone is saying that, oh, there is a good red candle, some Marubozu candle, there is no wick to it, so strong closing, and it has broken the support. So what everyone will do is go and buy a put here, and what market will do, it will form a hammer candle. No worries, people feel that okay, it is just doing some time pass, maybe it will uh, it may form an inside candle, or maybe it is just putting a halt candle and then it will fall further. So a lot of psychology comes into place. But my point here is, if this is a good red candle, if it has broken the support, that means fear should play here, and we shouldn't be seeing any candle, any indecision candle here. Okay, so basically the idea is any indecision candle shouldn't come here, regardless, it can be anything, whether doji or a dragonfly doji, great candle, anything. There should not be any indecision candle here. If it has really broken the support, we need a proper another red candle, which should, this is the important point, which should close below the low of the breakdown candle. Okay, so we have a breakdown or a breakout candle. Okay, so these candles are basically your alert candles. But to go on trade on that side, we need a follow through. So what do you mean by follow through? It is basically, if a candle has broken a support, okay, if it has broken a support, then we need another candle, immediate candle, okay, because there is a selling pressure, right? So there is a sharp selling pressure, it is breaking the support, and it is going to definitely continue further. So this is called as follow through. Okay, so we'll see live examples of all of this, but this is something which you really need to know. So it is like, if there is a tsunami that happens on the sea, and there's a large wave which is about 40-50 feet. So obviously the 40-50 feet wave will uh, slash everything which is around it. If there is any anything around it, maybe a vehicle or maybe a building or anything, it is going to enter all around the places. The water is going to enter around the places. So just imagine yourself, there is a 40 feet wave coming in. Okay, is it possible that there is only one wave which is 40 feet and all the other waves are just about 1 or 2 feet? It cannot happen, right? If there's a tsunami means it's an earthquake which has taken place inside the water. So obviously, if the first wave is around 40 feet, the next wave can be greater than that, or maybe slightly lesser than that, but that impact is going to continue for some time. So that's what we are expecting here. Whenever it breaks a support or resistance, we want to see that impact to be continued. Okay, so that's the logic here. So if this happens, what we normally do is, I'm just drawing another thing. So this is the candle which has broken the support, and this is the candle which is a follow through candle, closed below the low of this candle. Now I know that, okay, now the market is bearish, and now I'm going to plan a put trade. So what I do is, if this particular candle is a small candle, I take entry right at the low of this particular candle whenever it comes. Okay, I'm not going to enter anywhere here because I'm a safe trader. I like to, stick to a stop loss which is not more than 20-25 points in Bank Nifty. Options I'm talking about. So I'm going to take entry right at the low. In case if this candle is, say, a bigger candle, okay, then I'm going to take entry at 50% of this candle. I'm not going to take at the low. I'm going to take it at the 50% of the candle. So this is the logic that you need to keep in mind. So what are the logic? If the candle is small, you take entry at the low of breakdown candle. If the candle size is big, then your entry should be at 50% of the breakdown candle. So this is the condition that you need to keep in mind. Okay, and this is going to be same for even bullish candle. So in case of bullish candle, I'm just drawing an example here. This is resistance. We have seen a green candle here, and there is another follow through candle. That means this is confirmed that we are bullish. So if this is a small candle, I'm going to take entry here whenever it gives a dip at this place. If it is a big candle, say it is something like this, then I'm going to enter somewhere around at 50%. So this is the logic. So what you need to keep in mind, if it is breaking a support or a resistance, we need a follow through candle, and you know where you need to take an entry. Okay. And now let's talk about stop loss also. That is very important. So if you're taking entry at this place, so if let's assume that this candle is a big candle, so we are taking entry at 50% of this. Here your SL should be definitely there, because if this candle has been broken, immediately the trend will change and the market will start moving upside with some good momentum. Okay, so this is a breakout failure, so this will be considered as a breakout failure. So hence the market will easily surpass this level and it will go up. And that is the same case bullish trade also. So suppose if you're taking here and we know that this is a proper breakout, and if it fails means it is going to break the low of this. Okay, so this is something you have to keep in mind. Now let's look at some live examples, then the concept will be clear. Okay, so let's minimize this. Sorry, I directly went to thank you, but I'm not planning that. Okay, let's open trading view. We'll look at today's chart so that it is easier for us to understand. Okay, so what happened in today's chart? This is my first 5 minutes candle. So I'm going to mark the high and low of that particular candle. This is my high, okay, the blue line, and this is my low. Okay, so what has happened here is this is my first candle. So where do you take the call trade? Obviously, if it gives a breakout here, we'll take a call trade. If it breaks down here, we take a put trade. Okay, so what happened today? Market opened and it came down. So this is the candle, okay, which is the breakdown candle. Okay, but see, there is no follow through. Immediately it put a green. So when I say breakdown candle, I want a candle to close below the low of this particular candle. Sorry. Okay, so but that did not happen. So what we want is, in case if this is going to be a failure, the high of this candle, immediately next candle will close above this and it will regain this position once again. But that also did not happen. So now we know that there is still a possibility of breaking down of this candle. So now what it did, so this is the candle which broke the low of this candle, okay, and gave a close. Cool. And this is also a candle which we can take into consideration that it went above and then finally closed here, and we can expect a candle to, so the next candle, if it closes below this, obviously that's a follow through. But to be very frank, this is not a great example of a follow through, because usually the follow through will happen immediately on the next candle. We'll see some examples like that also. But since it's today's, it is better to understand, because a lot of people would have watched the graph today, so chart today, so it is easier for us to understand. So if this happens, what I'll do, I'll take an entry somewhere at this point. Okay, the low of this candle, or maybe you can consider the low of this candle also, because there are three lows at the same place, so you can consider this. So this is the follow through candle. It immediately retested this level and we saw a fall. Okay, now understand how it's falling. Okay, so this is the follow through candle. Next, it made a halt, no problem. Here you can wait because we already have a follow through of this level. So until and unless market doesn't cross this place, you are safe. This is not a follow through, but then we got an immediate follow through. Again, for this candle there is no follow through. Then the next candle gave a follow through. Okay. Then the next candle also gave a follow through. Then this candle also gave a follow through. Okay. And what happened? It started consolidating. So what I usually do is, when I see that there is already a good momentum done and there was no follow through candle immediately, okay, so I exit my position here. Okay, so this is the best place to exit your positions, and that too, in case if you have waited for another candle to see if it is breaking, like in these cases, that's what has happened. So there was one candle, no follow through, then another candle, no follow through, then another candle. So this was a pattern that they were following today. So here in this case, if this red candle hasn't closed below this, then 110% you exit your position. What it did, it gave a further breakdown with a good red candle. So imagine if it has halted here, it becomes a swing support here. So this red candle, see, it broke this support, but there was no follow through. Immediately it came up. So once it has closed above this high, means this fall is finished. This is the first indication that the fall is finished. Now you will actually look for a buy entry in case if you wish to. Okay, you already made money here, so you want to close the shop, you can do that. But just in case if you think that I can go for a buy trade, like I was very confident today that the market can also go to the day high once again. So here the market took a halt. So we spoke about this support. Okay, let me just, so this was a temporary support that was created. So if you look at this, you know, so we almost like kind of made a double bottom here. Okay. So now where do you take a trade? So there was a trade that was available at this place, but for that you need to know something else, which I'm going to discuss in this video. But so far, this is what the logic is. Okay. So likewise, if you want to trade the upside, see this is a breakout candle and no follow through, but in this candle it just managed to close above the high, so it is still bullish because that's how they were following today. So now, like I said, 50% of this candle is your entry. Okay, so for example, if this would have formed around 2 o'clock, you definitely could have entered onto a call trade here and expecting it to move on the upper side, but since it happened at the end of the day, we stopped here. Okay, so it has closed on a bullish note. Okay, so that's what we need to understand. Now let's look at another example so that this concept becomes more clear. Let me remove this drawing. Okay, so let's go. Okay, So there was one thing which I wanted to show on the November 9th. So breaking the myth of big red candle or big green candle. Where is November 9th? Was it November 9th or something else? I just forgot. Let me just quickly check that. November 9th. I mentioned it. Okay. So let's go back to 9th November. I think we are almost at 15th, 11th, and 10th. And this is the 9th. Okay, I'm not maximizing it because I think if I maximize it, it may go okay. Thank God it is still there. So this is what I was talking about, a big red candle. Okay, so this is the myth that we are breaking. So whenever people see these kind of big red candle, they immediately go short because they have seen some selling pressure. They expect the market to go down. So that's what everyone's expectation should be. But look at here. After this candle, there is no follow through. So what you do, you mark the high and low of this candle. Okay. So let's just draw a high and low. Sorry, it's a little bad. I think that should be fine. I wish I had a scale and okay. So finally we have this low. So whenever this low is broken is when I know that it's a so breakdown and we need a follow through to it. The first time it break down this level here, okay, but see no follow through, immediately it came back in. So this is a confirmation that this is not a breakdown. So if you want to take a trade, you could have actually taken a trade here, okay, when it closes above this, and this is like a failure of this particular trade and hence it went up. But in next video I'll explain how you should have taken this trade, but not on this one. Okay, and now we are clear that if we have to take a trade on the upside, I need a candle close something like this, then only I'll take a trade. But see, nothing happened. The entire day was sideways. Here you see a big bull candle. What happened in the market? Immediately, no follow through, came back down heavily. Okay, so this is why I was saying that don't go with the size of the candle and think that the market is bullish or bearish. It can screw up a lot. So now let's discuss some other day. Let's discuss something recent only so that you all remember it. There is a chart. Okay, let me just put refresh. Okay. Okay, so now let's discuss this one. Okay, this is Wednesday, Tuesday, Monday. Okay, so if it was a Monday, what you normally do is you mark the high and low of first 5 minutes candle. And actually I wanted to discuss this even on the Hindi version that I posted, but let's see if people watch this video. So here, see what happened. This is the high and low that we have. Market crossed and closed above this, so this is our breakout candle. Okay, but there was no follow through, immediately came back in. Second time, so this is the candle which has given a breakout and there is also a follow through. Here now you are confirmed that the market has a high probability to go up. Let me just zoom in a little so that the candles are visible. Okay, so see, this is what I was saying. It came back in, gave a close, gave a follow through. This is what we wanted. Now here what happens is, since these candles are very small, hence it broke the low of the breakout candle, but this is okay. Okay, so you don't have to put a stop loss here. because you will plan an entry here and your stop loss is here, it will definitely, because Bank Nifty itself is a volatile instrument, so we're not supposed to put a stop loss there. But if you have put a decent stop loss of 25 to 30 points in the options, it wouldn't have hit. Okay, let's consider that we put a stop loss here and it got hit. Okay, now we'll again see if it is giving us an entry. Now see what happened. Again, breakout of the resistance, follow through candle. Okay, now I'll put this high as my entry point, this low as my SL. It again came back, retested the level, did not hit the SL, and from here we got that short covering move. Okay, so here when do you exit? So the breakout is already done. Okay, 2 times it's done. So here don't waste time looking for a follow through candle here. Okay, so there was someone who texted me that okay, I remember. So he said that I was waiting for the retest. So retest was already done at this point. Okay, so that is what I wanted to mention. So what it did, in the immediate next candle, gave a follow through, follow through, follow through, follow through, follow through, follow through, follow through. Here it failed. Okay, here it failed, and then it tried again. Nothing was working. So this is the place where, so once you see a failure candle after a good move, you exit your position. That's what you are supposed to do. And then see, market went sideways, gave a dip also. So this is what I wanted to inform. Now, so this is the main logic which I wanted to explain. There is another quick thing which I want to tell you. So some people told me that it would have been great if we could get a support resistance in place. I'll give you the simplest form of support resistance. What you do is last 3 days, okay? Change the chart to 15 minutes time frame. Okay, this is 15 minutes. All that you have to do is take last 3 days of Bank Nifty, and what you need to do is mark the first candle's high and low for the last 3 days. Okay, so 1, 2, and okay, let's take 4 days. 1, 2, 3, 4. Okay, so here you mark a low, you mark the high. Similarly, here you mark the high, you mark the low, and here also you can do that, but any which ways it is inside our support resistance only. Okay, so imagine we have marked all these levels, and I haven't marked today's uh, because I'm just trying to explain how you could have traded this level. So now let's switch it back to 5 minutes and we'll enlarge the chart. Okay, so you already have support and resistance in place. So why we are doing this is, like I told you, the first 5 minutes candle is very important. Okay, so every other day when we trade, the opening and the opening price of that particular day has very important perspective, because people's positions are carried on that basis. So see what happened today. You already have a resistance. Cool. Okay, you have a resistance here, you have a resistance here, and yesterday if you see, this was a strong resistance. It took so much effort, but then finally it broke down. What happened today? Market opened gap up. It opened gap up and it broke this resistance. Cool, now I'm ready to buy a call only if I see a follow through candle for this particular candle. Okay, and imagine you mark this. What happened? So no follow through, it immediately came back in. Came back in where? It came back to this resistance again. So now I'm confirmed that the market is not going to go up. Now what I'll do, this is the candle where I'll take the entry, the low of this candle, and this is my follow through candle. At this point, it hit the low, and actually it did. So this is the low. I think it missed with some few points. Okay, but it gave an entry here, and then what it did, this support is also breached. Okay, and then finally it went down. So here you will stick to it, you will actually wait. Okay, so here it did not give a follow through. We'll just see if it gives follow through in the next candle. Here you got a follow through, again no follow through the next candle. So we already discussed, so this is the pattern that they followed today. So here follow through, here it gave a red candle but no follow through because there's a support here. Finally it took a halt, so here we actually exit our position. Okay, so likewise, if you wanted to take a bullish trade, look at this, a breakout candle of this last resistance. We also have a follow through candle. Okay, you take entry at the high of this candle. So this is a small candle, so you don't have to go for 50%. So in this candle you got entry, it went up, took a rejection here, came back in. So now only when this candle's low is breached is when Bank Nifty will further become bearish, but that did not happen. See, immediately with one candle they broke this resistance, also gave a follow through, immediately broke this resistance also. At this resistance, this is the follow through candle. Okay, so and now it has given an entry at 50%. So this is what I wanted to discuss. So what we covered so far is we covered how to take entries, how do we get the support and resistance levels. So you mark the support and resistance levels based on this. Trust me, you will love it. You know, there is no indicator or nothing that you need. So there are some points that you need to write it down so that you don't forget doing it in the everyday basis. So my request would be practice it for about a week or 10 days, then automatically this will come to your mind and you can trade these levels easily. So what are we supposed to do? The first step so we are going to just mention the steps, so this will also summarize whatever I was talking. So wait for the first 5-minute candle to form. Second point is mark the high and low of the first candle. Third point is wait for breakout or breakdown of the first candle. Fourth point is if breakout or breakdown is done, then wait for follow through candle. Follow through candle. And then what you do is entry should be at breakout or breakdown candles high in case of a breakout candle and low in case of a breakdown candle, or at 50%. Okay, so I hope this is clear. And every day what you do is, as a part of analysis, you change the chart to 15 minutes, mark the high and low of last 4 days 5-minute candle, this will give you support and resistance for the next trading day. So that's it. I think I've explained everything the way I should have. In case if you have any questions, you can just put it on the comment. In case if there's another video required to address all those issues, I'll definitely do that. But I think most of it, the concept has been explained clearly. because in the Hindi video there was no questions at all. So, but just in case, if you have any questions, you can definitely come and ask me. And some people have my number also. You can directly text me. I'll answer it. Okay, so this is all we learned today, and there is another video which is pending. So how to trade positionally, and also some scalping techniques in Bank Nifty using the same candlestick fundamentals here, the thing that I taught you. But people who practice it regularly will automatically understand how to do scalping and where to take entries. Okay, so a lot of times what happens is you can actually take an entry immediately, like the one that happened today. So in my yesterday's analysis, I had mentioned that you're supposed to take a put trade at this place. Today, Bank Nifty opened with a green candle. If the next candle did not close above the high, immediately you can actually go short. Okay, and this is what you could have got. And here, if you think why the see here, this is the first candle high. Okay, for the 5 minutes. Let's quickly discuss this. Here, see. So ideally, okay, let's forget this. What happened here is this is the support, this is the resistance, okay? 5 minutes candle breakout. There is a follow through also, but see, market did not go more on the upside because we already had a resistance here. Exactly at that resistance, it failed, okay? So what you do is you can actually take a trade once it closes below the first candle's high with a follow through. Then also you can take a trade, but ideally it closed during the end of the day, and we actually missed it. Okay, so these levels are absolutely fantastic. Just put it on a 15-minute chart. You already have your support and resistances at place, and you will see that the market will respect that level superbly. And at this point, whenever there is a resistance, and so there is a resistance on the top, there is a resistance here. The first candle broke it, but there was no follow through, so that means you should definitely go short. So understand this logic and apply it tomorrow. If wherever the market opens, then it will work like wonder. Okay, so thank you for watching, guys. Let's meet in another video. Please do not forget that we need 200 views and 50 likes, and some comments. If there is anything that can be appreciated, that would be great. And second thing is, any questions you can definitely comment, and I'll respond to it. Thank you for watching. Let's meet in another video. Till then, take care. Bye bye.